what you do, give it all of you, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing, you can have it if you dream it. Just be brave and you'll achieve it all, it all.
All right. Happy birthday, United States of America. 250 years. Wow. Hard to believe, huh? We made it despite ourselves. Okay. All right. We'll get into that a little bit here, folks. Good evening, everybody. I see people are still joining us. Come on in, gang. Lots of room right here up in the front. It's kind of like church, right? Everybody sits in the back. Okay. Ed S., I got your email. Thank you very much. I'm going to pass that on to John. Some good ideas in there, and everybody's coming on. Okay, let's get started. I don't want to keep you here all night, especially if it's if you got a little party going on or something here for the July 4th celebrations. People said to me, "Oh my gosh, you got a you got a session tonight. It's July 4th weekend." I said, "Well, just for those that want to join us, we're here. All right, and if you don't want to join us, that's fine. That is fine because." Because you can catch the recording after, right? We are recording it. So, all right, let's get started. Speaking of recording, let's hit the button right here. We go. All right, good evening, everybody, and welcome to DayTradeSPY.com's Week in Review, Intro to Trading for Sunday, July the 5th, 2026. And my name is Hugh. All right, there I is. Okay, full color. Okay, I don't, where's my, thing here for the well, that's okay. I don't have the control unit for the blinds behind me, but I think it's going to be all right. So, sun's kind of going down now anyway. So, all right. So my name is Hugh, and tonight what we're going to do is we're going to talk about last week in review, the upcoming week. Oh, where did it go? Where did it go? Last week in review, the upcoming week. Why is this going? There we go. Got a little 2-minute tutorial. I'm going to answer your questions. Brief history of the stock market. I don't know if we're going to answer the questions. I'll try and get to some questions. Let's put it that way. And yeah, in fact, we're not going to do the 2-minute tutorial. Let's scrap that because we're replacing that with the brief history of the stock market. This is kind of in celebration. Oh my gosh, I keep doing this the wrong way here. Brief history of the stock market in relation to the country's 50th year, right? So it's part of the whole July 4th thing. So just kind of go over and kind of go over where the stock market kind of started from and what things were like a couple hundred years ago on the stock market. That's actually it's going to be pretty entertaining. It's not like a boring history lesson, all right? It's not that at all. So, all right. So let's move on. My name is Hugh. Why listen to me? Anybody who is new on, let me know if you are new. Put in the questions box that you are new, and if you don't know what we're all about here. Okay, I see the questions already coming in here. Hello from St. Louis, James. Good to have you here. Houston, Mark. Okay, glad to be here. Happy birthday, America, Rod. Yes, yes, absolutely. Okay, why listen to me? Well, I'm a long time trader. I've been doing this for a long time. Publicly traded since 2010. Excuse me. Sometimes I wonder why. Because yes, I can make a lot of money trading. Why bother trading? It's because I enjoy it. I enjoy it, and I like to hear the positive comments coming from people to say, "Hey, you know what? Because of you, Hugh, I made a lot of money. I've been able to change my life, my whole lifestyle. Everything is really kind of cool." And that's very rewarding because once you have all those material things, your houses, cars, boats, planes, whatever you do with all that, all those toys, and by the way, you're not going to take that with you, all right? So when you move on to the next world, that's staying, man. That's like I don't see a lot of moving vans following hearses. So all those things, we're only using those while we're here. Anyway, once you have all that, you kind of you want more, you strive for more. And and that's kind of what I mean. Some people, right? Some people like control, for example. There are people out there who make billions of dollars since they've been president. Oh, sorry, did I say that? But they make a lot of money in whatever they do, and they still want more. So some people aim for power. Some people aim for notoriety, whatever it is. Me, I just enjoy trading and training because I enjoy seeing the results, the fruits of our labor, and showing people how to be self-sufficient by using the stock market. I taught my kids, got a son and daughter, taught them how to trade so that they're self-sufficient. I mean, they have other careers as well, but the thing is, if they know how to trade, they can always go back to the stock market and earn really a living if they so choose. Okay. Um, It's good to have a job, J-O-B. It teaches you a lot of stuff. J-O-B, you know what that's? That's just an acronym. You know that, right? J-O-B, it stands for just over broke. And how true it is. So by knowing how to trade, and if you can set up your life so that you can get that little time in the morning to get in, make some trades, get in and out, you can do very well for yourself. Anyway, that's why I do it. So, been teaching publicly since 2010. Mastered some pretty cool techniques from the trenches. I look for short-term breakout trades multiple times a day. I just go for those pennies. Get a few cents, 5, 10, 15, 20 cents, whatever it is. Take the money and run, right? Keep adding it to the pile, adding it to the pile. And I thrive on the success of other people. My saying is very simple. If you want what I have, you got to do what I do. Now, my cohort, John Johnson, he also has a saying. He says, if his definition of success is doing what you want when you want. He's got a beautiful ranch in Texas. He's got horses, all kinds of stuff, and he enjoys riding his bike. He thoroughly enjoys riding his bike and other things, and it's because he does those other things because he's very good at trading. He's a lawyer by trade, but he doesn't practice law anymore. In fact, he just trades, and he teaches how to trade, and this is what he does. So he's doing what he wants when he wants. He is not tied to a law firm that is going to dictate to him what he's going to do for 20 hours a day. And too bad about your family. You'll see him sometime, Anyway, that's really kind of pretty important stuff. So, anyway, again, my name is Hugh, and let's take a look at the market here. I also want to tell you about spying the market. Now, last week, I told you that the newsletter was going to be on, you think trading education is expensive? Well, because of the July 4th weekend, we changed things around a little bit. So I gave you the July 4th edition rather than the Happy Birthday America edition, Happy 250th birthday edition. Instead, that was this last week. And this week is going to be the You Think Trading Education is Expensive? That's what this week's topic is going to be about. Now, if you don't have a subscription to the Spy of the Market, it's free. It doesn't cost you anything. Very easy to get it. It's only a brief 2-3 minute read, 750 words, light, relevant, even entertaining. All you have to do to subscribe, go to our website, daytradespy.com. And when the pop-up comes up, just leave us your email address, and we will get you on the list to spy in the market. We have a lot of people that read this religiously. It comes into their inbox every Thursday. And I know some people, they actually have, they collect them, they print them off, they put them in a binder. I know a couple of people, they've got the binders right in there, right on their desk, and they flip through them every time, whenever they get the urge, they look at 2 or 3 of them at a time, and they're quite entertained by them. So, Spy on the Market, it's been going now for, oh my gosh, a long time. Okay. All right, let's take a look and see what's going on here in the market. This is what happened last week, folks. And let's just expand this and get into what we had here. Excuse me. Well, on Monday, the markets rallied as geopolitical tensions eased. SPY climbed 1.2% on Tuesday. We closed off the first half of the year, the end of June, with a nice broad rally. By broad, I mean not just the tech stocks, but everything across the board came right up. There's a little bit of a market rotation in the last couple of weeks there, 2, 3 weeks. But it cemented the quarter's biggest gains. SPY rose 0.79% on a tech rebound in the job strength market. That was on Tuesday. And that was the end. I cannot believe it's the end of the first half of the year already. Now we're pushing into the second half. And excuse me, it's so funny too because I was just telling my wife that I sense that the days are getting shorter again. The summer solstice happened a couple of weeks ago, and already I sense that the sun's going down a little bit sooner now. Just not much, maybe a couple of minutes, but you can just sense it in the air there. So on Wednesday, the markets were mixed. We experienced a surge, but then the S&P slipped back down 0.22% on a chip maker pullback as investors took profits in the latter half of the day there. And on Thursday, we had quite the jump to the upside. We had a surge. SPY swung wildly, broke 751, only to test, came right back down to test 740, all the way down to 740 again before it wrapped up the day. Finished pretty well flat to the day before, Thursday. Sorry, Wednesday to Thursday, which is really interesting. Now we made money on Friday, but it's quite the swing all the way up there, real fast down, and real fast back up. That's pretty amazing to see that kind of a response. And of course, the markets were closed on Friday for the July 4th holiday. It was closed on the 3rd in celebration of the holiday. I quite enjoyed this long weekend, by the way. I thought, okay, that's kind of nice. Kind of nice to get a little bit of a break, even though I love trading and I really enjoy trading and looking forward to Monday morning, tomorrow morning, so we'll get back into it. But it seems to be we had quite a few days off. We had was the Memorial Day, Juneteenth Day, and July the 3rd, 4th. Very quickly. They all kind of came up very quickly. So, all right, what happens from a seasonal standpoint? Let's take a look here, folks. This is a seasonal chart for those not familiar. The blue line is where SPY is right now, and the red line is the average of the last 5 years' daily close. You can see we've been a bit of an uptrend here on the close here. Historically, when I look back, SPY rose about 4 points last week, and historically, SPY rose about 4 points the following week as well. So, all right, let's take a look and see what's going on here. We're moving quickly, in part because I don't want to keep you here all night. I say this every week. I say I don't want to keep you more than an hour, and yet usually I end up going a little more than an hour, or I'm going to try and close off a little bit earlier again so you can go back and enjoy the rest of the weekend while we still have that. But anyway, I'm not going to rush through it too much, but it's going to be very interesting. And I just want to kind of get through the session here and get into the good stuff, right? Folks, despite the economy facing challenges, all right, the market remains resilient with gross domestic product growth on pace to advance at or above 2%. We got an interesting labor market, still trending upward, relatively steady. It's called the Goldilocks, they call it, not too hot, not too cold. Kind of right in that sweet spot right there. This last week, jobs gained 57,000, a little less than the expectations of 113,000. But unemployment ticked lower as well, down to 4.2%, as wages gained 3.5%. Hmm. Just get a drink here. My throat's a little dry here this evening. Excuse me. Oil prices fell. As Iran and U.S. make progress towards peace negotiations, traffic through the Strait of Hormuz picked up. It seems to be on and off again, off and on again. But generally, there's a lot of ships making it through right now. So hopefully that will continue and ease up on oil. I see that the price of gas has fallen dramatically in the last little while since they opened up the Strait of Hormuz to ships, and we're seeing a lot of oil being shipped. So right now, the average price in the U.S. for a gallon of gas is somewhere between 384 and 387. Represents a decrease, believe it or not, from earlier in the year rather, though prices remain higher than a year ago. So that the effects of the oil blockage there is still is being felt, but it's easing pretty good. So anyway, markets continue to be cautiously optimistic with oil prices. They're not jumping the gun too much, but it's not too bad. Feds remain split on interest rate direction. Bringing inflation down is a key priority for the new Fed chair, Kevin Warsh. Here's a chart that looks at the monthly job gains, showing signs of improvement thus far. As you can see, the average gains here year to date is about 92,000 for 2026. For 2025, we're looking at 9.7 thousand. So things are picking up here as far as jobs is concerned. Oil prices reverted back to near pre-Iran war levels. Well, gas price at the pump a little bit slower to moderate, probably using up some inventory and whatnot, but it's easing back, not quite there yet. But you can see that the average price is falling nicely. And with crude coming down, now this can change in a heartbeat. As soon as some bombs start falling and they close the Strait of Hormuz, it tends to go up. So you're going to see this average gas price, it trails a little bit. the price of crude, right? There's a little bit of a delay in there. It's kind of just a little lagging. It's a bit of a lagging indicator. So, but it's coming down, which is really kind of nice. And of course, that bodes well for everything because transportation costs are decreasing, right, with the price of gas coming down and diesel and everything else. And of course, that helps inflation. So here's what happened this week on the markets. S&P 500 rose 1.8%. Excuse me, year to date 10%. If we extrapolate this to the end of the year, if this continues, well, we're looking at what 20% return on the whole year. If that would be the case, that'd be kind of nice, right? The Dow Jones up 11% year to date, and the Nasdaq is up 11.5% for the year, and both of those ran up 2 and 2.1% last week, and some pretty hefty again, a lot of rotation in equities that came out of say the tech stocks and semiconductors, chips, that sort of thing, and into other segments, which is why the Dow and the Nasdaq also shot up. So pretty interesting to see how things are going. And looking at the week ahead, kind of a quiet week actually. On Monday, we've got Institute for Supply Management Services PMI report. Not a lot of news on Tuesday. We've got the Fed meeting minutes from the last time, a couple weeks ago. That's going to be reviewed on Wednesday. Thursday, our usual unemployment claims. And this week, we also have existing home sales. And for Friday, another low, no news day. That's economic news. Of course, headline news, that's a different story. And whenever there's headline news, things change, right? So again, we could see something change in the interim, but this is just scheduled economic news. Kind of nice to see a little bit of a lull in the action, I guess you can call it, right? So here's how the volatility is shaping up. Medium on Monday, low on Tuesday, medium on Wednesday and Thursday, low on Friday. Of course, whenever President Trump speaks, expect elevated volatility straight up the line there, right? Because you never know what he's going to say or what he's going to do. So now I haven't seen the speech from the July 4th, yesterday's party, the big party. In fact, I don't know too much about it. So I'm sure it was a big hit. So, but anyway, I've been busy myself, right, with celebrations and stuff. So I hope you had a good July 4th event as well. I'm sure live, but it was barbecuing and friends over and beer flowing and whatnot and carrying on, so celebrating. It's actually pretty exciting. We were talking here the other day about a lot of countries, a lot of, oh my gosh, let me just see, countries that did not make 250 years. So we have some interesting, not all countries are out there that last this long, despite ourselves. The Soviet Union, right, lasted 69 years, 1922 to 1991, before dissolving into 15 independent republics. Czechoslovakia lasted 74 years, 1918 to 1992, before peacefully splitting into Czech Republic and Slovakia. Same with Yugoslavia, 73 years, same time period there. But that was the prior violent disintegration during the Balkan conflicts. What is this? Grand Colombia lasted just 12 years, 1819 and 1831, before fracturing into the modern nations of Colombia, Venezuela, Ecuador, and Panama. I didn't know that. East Germany, right? East Germany lasted 41 years, 1949 to 1990, before reunifying with West Germany. Austria-Hungary lasted 51 years, 1867 to 1918, before collapsing at the end of World War One. A lot of countries, a lot of empires, Roman empires or the Ottomans. You don't even have to go that far. Canada right now. I mean, they've got the province of Quebec. They've been talking about separating from for decades now, if not longer. And now the province of Alberta is also talking about cessation from the rest of the country. And if that happens, I could see the whole country fragmenting right off, right? I don't know what's going to happen there, but talk is cheap. Talk is cheap. We'll see. We'll see what happens. But so countries don't always, stay together. To stay together for 250 years, that's pretty remarkable. Um, all right, let's move on. Let's move on. I hope another 250 years for us, right? And sometimes you never really know because the problem with this is that freedom is a funny thing, you know. You kind of assume it's always going to be there. The problem is that with freedom, you can actually vote yourself into not being freedom. They say, what's that saying I heard the other day? In the communism, it's easy to get into that, but you're gonna have to, there's only kind of like one way out, death. It's almost impossible to eliminate communism once it infiltrates into society here. Anyway, we'll get into that in a little bit here, folks. 2026 goal. This is where we started back in January, early January, trading 5 contracts on everything that we talk about, everything we narrate in the trading room. All right. All trades that are tracked in the trading room are recorded as if we're only buying 5 contracts. And here's the way that looks right now. Now we make an adjustment on this because there's a suggestion that we're going to probably be looking at. So anyway, if you'd have taken these, you'd be up $31,780. This last one was in less than a minute, and so we'll see. But I may be making an adjustment on some of these. We'll see. Anyway, that's pretty good. That's pretty good rate of return on just 5 contracts. And by the way, your average buy-in price is right here. If you look at this, I don't have a specific number, but it looks like $3,000 is your average. 3,500 or something would be your average investment in 5 contracts into whatever we are trading for the 2026 goal. So what we're gonna do is we're gonna see where we end up at the end of the year with this, which is kind of interesting. I believe last year we took was it 5,000 to 50,000 or something. We did that by September sometime. I'm just kind of speaking off the top of my head on that one. I don't quite remember, but it was something like that. So anyway, congratulations to all those people who are doing this with us and are making money. Uh, Sorry, a little raspy voice this evening. Folks, I want to tell you about our programs, Day Trade Spy programs, in particular the trading room. The trading room, this is where we do this. All right. We narrate in the trading room. That's part of that 2026 goal I just showed you. And you got to be in the trading room because that's where we narrate it. Okay. Now, John and myself, uh, we are pro traders. This is what we do. This is not something we do on the side. We don't have other jobs. John is not practicing law, and he does this in the mornings and does law. No, this is all we do. We day trade options on SPY. In the mornings, we get together and we discuss the events of the day that are going to be affecting the market. All right, so John and I, we look at the market starting around, I would say 8 o'clock, 8:30, somewhere in there. We get in and we take a look at all the news items, Twitter feeds, or sorry, X feeds, Twitter, whatever, Truth Social. We look at all the various inputs, economic news, chart technicals on charts. We bring it all in together and then we discuss where do you see the market going? How do you see the markets rolling out today? What's going to happen? And and then we discuss it at 9. We get together at 9 o'clock. We open the trading room around 9 o'clock. We play music. The music is not there just to entertain you. It's just kind of like a soft, easygoing listening music, but that is to ensure that your audio is alive. So let's say you're logging in at 9:10, you don't hear any music, check your speakers and your software. The issue would probably be on your end on that one, right? So, and then at 9:20, we get together and we start discussing the events that are going to shape the market today. By 9:30, we are looking at getting into the market. As soon as the bell rings, we're looking for the setups, whatever it is that we're looking for. And we look at different setups for different strategies. We've got the OMG strategy, out of the morning gate, short for out of the morning gate, whereby we look for breakouts based on the 5-minute chart. And then, so anyway, we're looking at all these things, the setups. We discuss these and we discuss them in front of everybody. We show you our charts. You see exactly everything we see. There's no hidden anything that we see that we're not telling you about. Right? Interactive, so you can get in and ask questions, and we like to answer them in real time. You learn and earn, fully narrated. This is where our strategies come alive. Every morning, 9:20, wrap it up at about 10:30. Sometimes we go a little bit later. All right, but usually around 10:30. We don't want to monopolize your whole day. Now, and I'm sure you've been in those trading rooms too, where you come on at 9 o'clock and you run till every day 4 o'clock. Well, sorry, but that's kind of like a full-time job. You can't even slip away. You can't even go have lunch because you come back and somebody say, "Well, I just sold," and say, "Well, I didn't know you bought. What did you sell? What did you buy?" You're looking at different things, and it's too chaotic. Or what happens in some of these trading rooms, so much time goes by, you don't even know if it's live or not. Sometimes 10 minutes will go by before somebody says something. Or here's the other thing. If there are multiple people, of course, uh, monitoring or hosting the trading room, then the person who's most charismatic tends to have, the control, right? They tend to have people tend to follow that person. And if the person, whether the person knows anything or not is irrelevant, right? If the person says, sell, 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 everybody just jumps in and sells as if, the sky is falling. And meanwhile, might not have been a good idea to sell. So you want to kind of be careful. What we want to do is we want to teach you the things that we are looking at. So at some point, if we get hit by a truck this afternoon, you can still carry on, right? That's kind of the objective here. So you learn how to do this. Now, I'm going to be totally frank with you. Those people who've been with us the longest time, they are the ones making the most money. All right. The longer you stay in the trading room, the better trader you're going to be. It's just simple as that. It's just like anything else. The more you do it, the better you're going to get. Because, we are subjected to all kinds of different scenarios, different situations. I don't think any 2 days in trading has ever been the same for me. In all the years I've been trading, I can't say, oh, this day is the same as that day. It just doesn't happen that way. Every day is different. Every day something new is going to happen. Something, so here's the thing. Let's say a news item comes out, or a headline news, or anything, right? And then the market reacts. But then the pundits, these are the mainstream media guys, CNBC and all these guys. They come on with their panels, and they take it. They take the news and they spin the news, and then how the market reacts to the pundits spinning the news. So you get all these different factors, different inputs, and you're trying to make sense of it. And by the way, one thing the market does not do is make sense. Yes, you know that. There's no common sense in the market. Okay. Um, Not that it lacks common sense. It's just that you can never say that if this happens, then if A happens, then B always, always happens. So much so that I will put all my money onto that situation that if A happens, B will always happen. It seems to me that if A happens and B happens, people catch on to the B that happens, and eventually it doesn't work anymore because everybody kind of caught on to it, and they were able to change the results. Anyway, folks, you gotta go in the trading room. I really, really, I talk about that a lot. I talk about other programs that we have as well. Our pick of the day, and also the Day Trade Spy signal sent to your cell phone every morning. You don't even need to be in front of your computer at that one. But you learn. That's what you do. The more you learn, the better you're going to be. So, 24.95 a year, which is actually a real bargain for what you're getting. Or if you don't want to go for the year, go 6.99 a quarter. Works out to $54 a week. And let me just take a look here. $54 a week. We're talking about $10.80 a day. What is that? Is that even a submarine? Is that a Subway sandwich a day? Maybe half a Subway sandwich. I don't know. With a drink, I don't know. Folks, best value. And you know what? I get people sometimes say to me, "Well, Hugh, I don't know. I don't know the strategy, so I don't want to be in the trading room." Well, do you know what calls and puts are? Oh yeah, yeah. Okay, perfect. You are the person that should be here. If you know what calls and puts are, you are eligible and very much in line to be in the trading room because this is where we teach you everything. And if you don't know something, just punch it up in the questions box. Hey, can you go over this or can you go over that? That's why we're here, folks. Use this QR code, right? Use this QR code. Obviously, you know what to do there. You get more information on the trading room. All right, let's get to some questions here. I want to get some questions and answer some questions here tonight if there are any. Glad to be here. Happy birthday. People just say happy birthday. Poor reception for the webinar. Um, Okay, let me get to some of these questions. Where do I see the next week shaping up? Okay, well as I mentioned earlier, in the next week, it kind of a low news day, news week. There's not a whole lot going on. On Wednesday, we've got the FOMC meeting minutes. They're going to dissect that and try and determine who voted for what and why. And I think the votes kind of split as to keeping interest rates the same. Last I think I saw it was like 70 69 70%. They want to keep it the same, and about 30% or so are thinking that the analysts I'm talking about here are expecting the market to go up a quarter point in the next session, which is going to be, I believe, and I'm going to pull it up right now to find out when the next Fed meeting is going to be. I want to say the end of the month, but I'm not really sure about that. Let me take a look here. Flip it down real fast. Fed members, Fed meeting here. We're talking about July. Okay, we are talking about, let's take a look here. There's a bunch of things coming up before that happens. Okay, we're into the latter part of July so far. Excuse me here. I think it's near the end of the month here. Yes, July the 29th, Wednesday, July the 29th. That's when the next Fed conference is going to be, at which point they're going to determine the rates. And a lot can change between now and then. All right, a lot can change. So we're going to see what happens. And there's going to be some CPI numbers, PPI numbers, PCE numbers, the personal consumption numbers. That's the main index that the Feds look at as to determine whether raise rates or keep them the same or lower them. And I'm just looking to see when the PCE numbers are going to be released um, for um, for July. I'll just kind of go back here and see. I find that oftentimes they release them, actually, interestingly enough, after the interest rate announcements. So, but I don't really see that. Okay, maybe it hasn't been scheduled yet. Okay. I don't see it's been scheduled yet, so we'll keep you posted on that. So, all right, any other questions here? Where do you get the news, Tim? Good question. Okay, we get the news from various sources, including mainstream media. I like to see Wall Street Journal. I feel that they're pretty good for news. I look at Market Watch. I look at various news feeds, like I say, from Truth Social, Twitter feeds from different people, Bloomberg. Who else do I get? Bar chart. I also skim over. Yes, I skim over Fox News and what's the other one? CNN. Uh, I, I don't put too much emphasis on those. I like to get the more trusted news sources, like Wall Street Journal is pretty good. I like Wall Street Journal. There's a lot of good news coming out of that, and they tend to update the news quite frequently. So the issue with news is that by the time we see it in mainstream media anywhere, it's old news, right? Somebody has already seen the news before or acted on it, or the newsmakers had acted on the news. So if I'm making the news, if I am, say, the person who's going to determine interest rates, and I know, I got a pretty good feeling I know where the interest rates are going to go, I may just jump on that before the news is actually released, and you'll see the market react a couple minutes before the news is released. And you see that a lot too. Um, so it's news is one of those funny things. You kind of find out after the fact why the markets moved the way it did. But the nice thing about the news is that you can anticipate movements. And you may not know which way the market's going to go, but it's nice to know that, okay, at 10 o'clock, this news item is going to come out. Watch for some bounce, possibly a breakout, possibly complete reversal, right? But if you can kind of anticipate where the hurdles are going to be, you can kind of brace yourself, is what I'm trying to say. Brace yourself. So anyway, Yeah, that's a pretty good. So anyway, we put it all together. We also look at the technical indicators. So here's the thing with the technicals. It's not either the technicals or the fundamentals. It's actually a combination of both. But what happens is that if the technicals are set up, right? If the technicals are set up and the news item triggers it, then the technical will probably fulfill, for example, a chart pattern. You might have, say, an inverse head and shoulders or something, and you're down to that right shoulder underneath. So the technicals are bracing for a move back to the upside. Well, it wouldn't take much for a news item to push it back up. It would probably take more for a news item to push it down than for news item to push it back up because technically it's set up to pop back up, right? So you're kind of watching for these things. You're trying to, align your thought with what the market is doing. And again, we are not looking for major moves to make some pretty good money on options. Now, if you're not familiar with options, we teach you, option trading and the leverage of options. Now, you get the cool thing about options, they're actually, we're not buying the stock. We don't really want the stock. I'm sure many of us have purchased stocks in the past where, oh, wow, this is so cool. I got a stock certificate. Well, what do you want me to do with that? Okay, you're holding a piece of the company, and I suppose at some point maybe, you can cash out, but we want to make money. I think that's the objective. We all want to just make money. We don't care about holding a stock, especially at my age. I'm 71, and I'm not looking for long term. To me, long term is the end of the day. So I want to make money. I want to make money this morning. Tomorrow morning, the next morning after that. So I like money. You can do things with money, right? Can't do much with a stock certificate. And I laugh at these people who say, well, if you'd have bought Apple 30 years ago, well, guess what? Maybe you did, maybe you didn't. And are you still holding Apple, or Google or any of these things? Anyway, this is what we do. And the huge leverage, but the leverage is offset by things like volatility and theta loss. So you're not buying a stock, whereas a stock, you can actually hold on to a stock forever if you want. And where the market's going to take it, that's where it goes. A lot more stocks go value will go lose value than increase in value. So you got to be careful about these things. But an option is actually a contract, and if you're contracting with the options holder, they're betting against you, for lack of a better word, and you're thinking it's going to go in a certain way, and they're thinking it's going to go the other way. Meanwhile, as you're holding it, it's losing value simply because of the time component, and volatility plays a big role in it too. You don't want to buy options when the volatility is really sky high. You want some volatility because that's where the movement is, but when it's really high, you're paying a lot more for the option than what it's worth. And then what happens? You buy high, and then of course they suck the volatility out of it, and now your option becomes worth much less. So you got that to deal with. So anyway, these are all the things, the components that we have to consider when we are trading, and that's what we do. So and that's what you're going to learn how to do too, kind of like a second nature when when you get into it. So okay, so question here from Chris. Need some further clarification. If your pick of the day says buy calls at the open, the market stops going down. Do you wait for the first 1 minute green candle, which would mean waiting for at least 60 seconds until the first candle closes, or do you just wait until the candle started going up and not a close in 1 minute? Let's wait to see what you guys say after that first couple of minutes. Now, I'm just curious if there's a hard, fast rule when you enter the call when the market's going down. Not 100% sure when you said the market reverses, but that does not mean the close of the 1 minute candle. Just wait until the first 1 minute candle or the other 1 minute candle with the first 15-minute reverses. Okay, so Chris is asking, thanks for that comment, Chris. I applaud you for taking the time to write that. Okay, so the pick of the day. Let's talk about the pick of the day. This is a service that you will receive just after 9 o'clock, between 9:10, somewhere in there, an email that says which option we are looking to trade at the beginning of the day, okay, when the market opens. By that, we mean when the opening bell comes. So let's say it's a call option, all right? It's a call option. Look at your 1 minute chart. And so let's say in a perfect world, the market opens, the stock starts pushing up. You see green and you just want to get into it right then and there. Okay, it's green, you're pushing up, it's a call option, you want to get it. Ideally, what you should do when the market is moving quickly in your direction at that 1 minute candle, look at your ask price. All right, because you're going to put your bid and ask. Your ask is the high price. That's what they're asking. Let's say the ask is $5. What you want to do is you want to get that option because it's moving in your direction right off the bat, right? And usually you can make your 6%, sometimes in seconds, if you know. So let's say the ask is $5. What I like to do there is I like to say, I will offer $5.04 or $5.05. I realize it's counterintuitive because wait a second, I'm giving you the ask price and you're saying go for more than the ask price. The answer is yes, because the market is moving quickly. By the time, if let's say the bid is $4.95, but let's say you even ask for the $5, you put in your order for $5 because that's what the ask is. By the time your order gets to the market, that could have pushed up to 505, 506, 58, whatever it is. So you're not going to get filled. It's your $5 offer, right? But by going a few cents over the ask, you're doing two things. Number one, you're putting yourself at the front of the line on the way up, which is what you want to do. And on the way up, where's this? Oh my gosh, I'm not very photogenic. You're going up, right? When the market's going up. The other thing is this, you're also putting pressure on the market to go up because you're pulling the market up with your order. Now, your one order is not going to make a whole lot of difference, let's be honest. But if everybody does that, they, in doing that, are creating more demand and you're pushing the price up. So if you get in right at that spot, market goes up, immediately put up for sale for 6%, you'll be taken out quite possibly in a matter of seconds. Now, the other alternative is this. Let's say the pick is a call option, and now the market on the 1 minute chart is going down, which often happens. Okay. What you want to do there is watch the 1 minute chart. Some point it's going to come down, find some level of support, and you'll see the pressure reversing back to the upside. You don't have to wait for the 1 minute candle to close. But let's say you're going down and now you're starting to see some green going back up. Green on the 1 minute candle starts, the pressure goes up. Well, then buy it there. So when you see your option turning from red to green, buy it there. You got it for a little bit of a cheaper price, is what it is. And then you'll ride it up later on. Sometimes what will happen is the market will go up, bounce off a little resistance, come back down, double bottom, and then carry back on up. So statistically, that's the way it works best. You don't have to wait for the candle to close when you do that. Okay, just otherwise you're always waiting for candles to close, and it could even close green, but then it goes back red. Don't worry about it. You're in it, and just hold on for the ride, and then see where it goes. So now that said, all right, some people they don't like it when the market turns totally against them. Obviously, what I've been telling people is if you insist on, say, using a stop loss, and in a case like that, let's say the market for whatever reason is just continuing to drop and drop, and you don't know why, it's no rhyme or reason, maybe just take a 25-cent hit. You can make up 25 cents fairly easily, and you don't have to watch it and worry about it. Okay, and I know some people like to do that, so um, I'm generally one that will stay in the option longer term because these options are designed to be longer term. Now, for reporting purposes, we have to close out the trade by the end of the day. That's why sometimes you'll see a loss there. But most of the time, if you hold it overnight, it'll come back in your direction the next day and it'll give you the profit. And also, markets swing quite a bit during the day. As you saw on Friday, we had the massive surge up and then a real big drop down. What's that? I don't know, 8 points or whatever it was down to the downside, and then came right back up again, and it closed within probably a few cents of the close from the prior day on Wednesday. So the markets have swings in them, and it's perfectly normal to see that. So anyway, hope that helps. Hope that makes some sense. Another question here: why not just buy at the open at the market? Well, because you could be going the wrong way. You want to go in the direction that your option is, right? You don't if you buy at the market open and it's going against you, well, you could sit there and watch it go down 10, 15, 20, 30 cents before the market reverses. When you rather take that that just wait a few seconds in there and a minute or whatever it is, a couple minutes or whatever it is, and get it for that discounted price. That's what would make sense. Um, because the markets sometimes do go against you at the market open, but they will reverse and go back up. And I would rather get out of it with a profit. Let's say I got into it at 932 or 933, and then I got into it at that time and then got out of it at 935, rather than get into it at 930 or 931 and wait until 2 o'clock in the afternoon before it comes back in my direction, if that happens. So anyway, that's great. I see Chris entered another little comment here. Thanks, by the way. Thank you for that, Chris. I love it. Uh, I love it. Listen carefully, folks. I'm going to read this word for word. BTW, that's by the way. Um, for anyone contemplating about the trading room, don't be foolish. It is the best investment you can make, well worth it. Thank you for that, Chris. That's really cool. I really like that comment. Obviously, you're in the trading room, and we're going to be okay in the trading room. Okay, I think tomorrow we're going to be in the. I think John and I are going to be asking people. Chris, you may want to get in on this. We even want to do brief interviews with some of you people in the trading room, or even the ones that are not in the trading room, to see how you're doing and how you're doing in the trading room, how your trading is going, and it's going to be for social media. I'm not going to kid you; it's a social media thing. Uh, we may keep you anonymous if you want, whatever. I'm not really sure. We haven't covered that yet, but we'll figure it out. We're going to send out a sort of a request to anybody who'd be interested in doing brief interviews with us in that regard. So, all right. So Dan's saying, "Why not just buy at the market open?" He means buying at the above the ask. Um, okay. So again, if the market is going in your direction, absolutely. Uh, okay. So yes, I see what you're saying. Okay, buy at the market price. Okay. Um, It doesn't happen often, but I've been burned myself by buying at the market price. Um, you can get filled for some astronomical price if you ask for the market price, because the market price is it's a negotiated price, right? It's whatever a willing seller and a willing buyer are going to negotiate. So if there's no volume, if the volume is used up at your price, and then it goes up to the next price, next price, next price, you could end up paying 20, 30, 40 cents more for the option if they're going to reach for your option way out there at the market price. I don't mind paying more, but I want to know how much I am paying for an option and the most I'm paying for an option and the least that I'm getting for an option. I want to be able to control that. And if I miss the odd trade, so be it. So that's kind of what I'm doing. But you know what? If you want to try trading market price and just see how that works out for you, you may be okay. So, all right, gang. So what we're gonna do here is I'm gonna flip over here and talk about 250 years of the stock market, actually 234 years. Market wasn't around the way we know it 250 years ago here. It all started with the Buttonwood Agreement back in 1792. This is when 24 brokers traded a handful of bank and insurance stocks under a tree on Wall Street. There it is. I think the other name for this buttonwood tree is a sycamore tree. So the next time you go out there and you see a sycamore tree, take a look at it and say, this is where it all started, under a sycamore tree. Well, here's what the tree looks like now. Obviously. And in front of in front of what was then the stock market, right? This is what it was here. And it's pretty obvious they planted another tree. I'm not sure if that's a sycamore tree or buttonwood tree, but that's the tree. I think it's a buttonwood tree. Folks, traders could only trade amongst themselves. This is agreed upon them. And they said, we're going to do this for a set commission fee. So things are starting to, look pretty good. And now, by the way, this is not a comprehensive history on the stock market. You can go back and delve into this in a very big way. It's just a very quick overview, in part because we are getting to the end of the session, but it's just a thing to celebrate the 250th, birthday of America here. So in 1817, they renamed it to the New York Stock Exchange Board, right? 24 people, they are the board. They are the board. And then a few years later, in 1863, they renamed it to the New York Stock Exchange. A couple years later, the first permanent building was the stock exchange building at 10 Wall Street. And I'm assuming that's the building there. This one here. I'm assuming this is it right here. Where is it right here? I'm assuming this is it here, over on the right. Can you see my cursor? I don't know if you can see my cursor at all. Anyway, yes, you can. Okay, there's. I got multiple multiple screens going here. I have the PowerPoint on the one screen, but then what I'm showing it sending out on the other. Then on my cell phone, I have it coming back to me to see what you're seeing. So anyway, that's kind of where it was there, and I think it's been there pretty well ever since. Back in 1824, the New York Gas Light Company, that was the predecessor to Con Edison. That became one of the first corporate entities listed. Now the longest listed stock on the New York Stock Exchange, Con Edison. This stock certificate, I believe, goes back to 1975. So this is not the first. I couldn't find a stock certificate older than this one. So, and I think you can actually buy this on Amazon. I'm not sure who's selling it, whether it's just a copy or the real thing. I don't know, but I don't have one. I just yanked this off the internet like I steal everything else. Now, a lot of crazy stuff going on in the 1800s. A lot of insider trading, a lot of market manipulation, right? You think we're manipulating the market now? Oh, you ought to see it what it was then. Wow, it's amazing we survived. It's amazing we survived. 1817, brokers drafted a constitution for stricter criteria for New York Stock Exchange listed securities than those traded elsewhere, coupled with the unusually strong performance of securities related to the Erie Canal, enabling Wall Street to surpass Philadelphia as the U.S.'s financial center by 1830. The Erie Canal was a big thing back then. That's when they built the canal between New York and Buffalo to open up that whole western frontier, right? Because when they get grains and different things from the west through the Great Lakes into Buffalo, Buffalo was actually a huge center for this sort of thing. And then they got into the Erie Canal and off to New York City. So that was a big, highly traded stock, I guess. They raised money to build the Erie Canal. Erie Canal is still there. They don't really use it for transporting, goods like that there. I mean, the St. Lawrence Seaway's opened up and whatnot. So, but this looks like an early uh, stock certificate going back to about 1845. If this is the way I read it. So I'd like to get my hands on one of these. Actually, it's pretty cool. 1846. 1846. Wall Street Journal. Big day in 1896. The rise of indices or indexes, however you want to say that. The Dow Jones Industrial Average, first published in the Wall Street Journal back in that day, right? 1896. 27 years later, the S&P 500 was introduced by Poor's Publishing. I think if I was Mr. Poor, I would probably change the name when I'm trying to sell something that's going to make you money. I probably not want to call it Poor, even though that's my name. There's just something intrinsically negative about that. I don't know. Anyway, that's just what I'm saying here. That was in whenever it was a year on that, 27 years later. So anyway, longest 10-year stock in the Dow Jones, Chevron. Since July the 18th, 1930, it's still on there. General Electric is the first final original member, and they were one of the first ones, but they were removed in 2018. I remember that was kind of a big day. Well, wait a second, they're going to take that off. They had to replace it with somebody else. Don't forget the Dow only has what 30 stocks or something, right? So they keep flipping them in and out of there. Turn of the 20th century, ladies and gentlemen. Let me see what happened. J.P. Morgan, Jacob Schiff, Edward Harriman, James Hill. We had J.D. Rockefeller, Thomas Edison. These guys fueled and electrified the nation, and they came in with their, Union Pacific, GE, General Electric, U.S. Steel. These are examples. A lot of these corporations began trading stock during this time. They're still in existence. 1875, we had roughly 54 million shares traded on the New York Stock Exchange. 1900, the year's volume surged to 138 million shares. Any guesses what the shares are today, folks? Punch it up in the questions box. What do you think? What do you think they are trading daily on the New York Stock Exchange today? Punch it up. What do you think they're trading here? Punch it up. I just want to get an idea here. 130 million shares in 1900 New York Stock Exchange. Let me know what you think in the questions box. 700 million? Psh, ha. Right. Right. Sure. Sure, Chris. Yeah. Okay. 2.5 billion. A little on the high side, Reggie. Okay. I'm just teasing you, Chris. Today, 1.3 to 1.5 billion shares trade daily. Wow, that's a lot of shares, lot of shares. Ken says 5 trillion. Nah, no, 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 no. That you're talking about how much money, what's his name? Elon Musk is going to have soon. Okay, that's still a lot of shares. 1.3 to 1.5 billion shares every single day. Far cry from the 24 original traders, right? Mid 1920s, everybody was trading, folks. And of course, you can't talk about the stock market unless you refer back to the big stock market crash of 1929. Valuations were completely untethered from fundamentals. There's a lot of great documentaries and whatnot, references to the Great Depression. And it's funny because just before that, I mean, the shoe shine board was trading. You get into a taxi cab, the cabbie was talking about stocks. What stocks to buy? Everybody's going, oh, what's the hottest stock? What's the hottest? They used to have the ticker tape machines everywhere. Seemed like the whole country was trading and valuations again untethered. Now suddenly the big crash came crashing down, ushered in the Great Depression. Oh yeah, what do we have here? Oh, I don't like that. That's supposed to do something. There we go. There we go. I like that. You like that? Let's do this again. Oh, look at that, how it spins around there. Wall Street in panic as stocks crash. Well, that didn't help. The newspapers are punching that up, right? I mean, that's just that fuels more fear, fuels more fear in the market. Yeah, look at that. The government sends aid to Pixley. We want food. Look at that. Everybody's. You saw these pictures everywhere. Look at them. Run on the banks. Run on the banks. Everybody's going bankrupt. Everybody lost everything. Jobs. You know, keep going. Can't take care of our own here. I tell you, things were pretty bad. Things were pretty bad there. Look at that. Free coffee and donuts for the unemployed. People standing in line, all looking for work. This guy here is looking for work. I know three trades, three languages, fought for 3 years, have three kids, no work for 3 months. I only want one job, one job. Those are bad times, folks. And yet we survived. We survived. America survived. Labor unrest and challenges. I don't really like this here. Let me just go this here. Okay. Labor unrest and challenges to capitalist authority created anxiety about socialist and union movements. There's a lot of fear, and a lot of left-wing policies, kind of like what's going on now. The fear was of the U.S. becoming communist, yet America survived. Didn't they say, the most we have to fear is fear for itself, or something along those lines? We pulled out of that, folks. We pulled out of that. And uh, and there's a lot of that now. It's funny because the other day I saw yesterday something about President Trump talking about the big fear is communism, right? All these socialist attitudes, especially from young people who are not really familiar with what socialism does and the fact that it doesn't work and it has never worked anywhere in the world. Why do you think it would work here? It just doesn't work. Get away from that ideology, all right? It's fantasy land. You can only, eventually you can run out of other people's money. I have to laugh because even Karl Marx's mothers always used to say, Karl, I wish you'd go get a job instead of, talking about capital. I wish you'd go make some. Folks, another historical moment in 1967, Muriel Siebert, they call her Mickey, became the first female to hold a seat on the New York Stock Exchange, born in Cleveland, Ohio, 1928. First woman of finance, that's what they call her, joined 1,365 male members of the exchange back in December 1967. Clearly, the stock market was a old boys club, right? She broke that one. Folks, the NASDAQ came in 1971. National Association of Securities Dealers Automated Quotations. Imagine saying that every time you want to say NASDAQ. And you know what? It would help if I spelt NASDAQ properly here. So I am going to correct that right now. Okay, there we go. What is going on here? NASDAQ. Get rid of the F. Is this better? NASDAQ. There we go. Launched 1971. Okay. All right. This is the first fully electronic stock market. Now it's the second largest exchange by capitalization, primarily tech stocks And guess what? The Magnificent Seven, they are all trading on that. They're all there. They are all there, folks. And that's where you see them. Okay, let me just see something here. My goodness. This is huge. The Nasdaq is huge, right? Okay, moving along here. Moving along. Okay. Now in 2006, New York Stock Exchange transitioned from members only organization to publicly traded company, NYSE. So the market index that tracks the performance of the New York Stock Exchange, actually NYA. Now you can't buy options on this. It's just the market index that tracks it, okay? The ICE, Intercontinental Exchange, I think it's from Atlanta, Georgia. So they own the exchange. They bought it. New York Stock Exchange hosts 82% of the S&P 500. 82% of the S&P 500 is on the New York Stock Exchange. Okay, the others are split among the other exchanges here. But in 2013, this is when ICE acquired the New York Stock Exchange Group for 8.2 billion. I remember when they merged in that. This was huge back in 2013. All right, some interesting facts about the New York Stock Exchange. The first company listed on the exchange, Bank of New York. Bank of New York. Con Edison, the longest continuously listed stock since 1824. They're the predecessor to the, actually, New York Gas Light Company was the predecessor to Con Edison. 1920, there was a bombing. Yeah, bombing started back then. Horse-drawn wagon, explosives detonated across the street, killed 33 people, injured 400 others. Extensive damage, but the building survived. And I know what you're asking. You wonder if the horse survived. I'm going to guess the horse got killed too. I'm not really sure. But I never found out about that one. But see, the bombings went back to 1920. Look at that. 2018, Stacy Cunningham. I hope I spelled that right. I think there might be another N in there. I'm gonna take my chances and put another N in there because that's how you spell Cunningham, as far as I know. She became the first female president of the New York Stock Exchange. And one more little tidbit here. That bell you hear every morning and every evening, that's not a real bell, folks. I'm sort of break it to you. I know I'm just as heartbroken to find that out as anybody. Folks, the original bell was, believe it or not, a gong. It was a gong. Well, now they use a louder electrical bell. They just push a button. But guest ringers include corporate executives, celebrities, athletes, and yes, my goal in life, my bucket list, one and only bucket list. Yeah, get to ring the bell. I wonder if there's any way I can ever get there to ring the bell. Anyway, that would be really cool. I think it's pretty well timed out too. So anyway. Okay, Sandra got here late. Is there a replay? Yes, absolutely. There is. This is being recorded. It will be available on the website. Hopefully, in a day or two. So that's the New York Stock Exchange, and I see we're kind of running out of time here. Oh, there it is. I broke my promise to you. Hang on. Let's go back to this. Okay, there we go. Got to get the fireworks in, folks. Through it all, America survived and thrived. Happy 250th birthday, folks, and hopefully many more to come. All right. All right. So, yeah, I will. It's 9:03 Eastern time. I'm going to let you get better. I like to watch these fireworks. We're watching fireworks. So where I am, I live like my summer home here is on the beach. And it's goes around this bay, and we can see the fireworks going off all night long. It's actually pretty cool. But I've seen so many fireworks in my lifetime. I went to bed after a while. So, but all right, folks. Hey, listen, thanks for joining us. Been a pleasure. I've got these QR codes. If you want information on the inner circle, DayTradeSPY signal, pick of the day, the trading room. Just put your camera on these, get the QR signals, and learn more about it. And hope to see you subscribe. Been a pleasure, folks.
I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear. I know it's been on your mind for a while, but to get what you really want, eyes on the prize. I can tell